In bullish candles, what's going on there? Institutional buying. Okay, so if this is a discount where we're anticipating institutions to come to the marketplace and deliver buy sell liquidity, all right, so we're expecting there is in the down candle, which is an order block, we expect the delivery of buy sell liquidity by the central banks to the institutions. How are they going to deliver liquidity to the institutions? In down candle. Okay, so in the institutions will sell while the market is going down. So in before a bullish displacement in the marketplace, you're going to get institutions selling into that last down candle. They're selling into that. Then what you get is the outcome of the sells. You get bullish displacement. And this is what everyone thinks of as the order block. The order block simply is an area where there was provision of liquidity by central banks to the institutions. That's what the order block is. A bullish order block is the provision of buy sell liquidity by the central banks to the institutions. I want you to think about a bullish order block like that. Now, the reason why the market will return to an order block sometimes is because due to the sheer size of these institutional orders, the market has to return back down to an area of fair valuation. Now, the market returning back down, so after initial rally higher, okay, market rally, for example, like this, and this is what we call institutional sponsorship. What is institutional sponsorship? Institutional sponsorship is the evidence of order flow. That's all you're looking for. So meaning when you get to a level and you see displacement away from that level, that is institutional sponsorship. So that displacement is evidence of institutional accumulation if it's at discount. So when we see this, that is institutional sponsorship, meaning the market is moving away after institutions came into the marketplace and they accumulated longs. Okay, that's what we want to see in a bullish order block. Now, a propulsion block, let's explain what a propulsion block is. If we get another down candle, so let me do something like this. And then we have this. Market opens up, trades all the way down there, and closes something like this. And now the level we're trading into, which is the body of the bullish order block, that's where you get the low of the candle. And then this becomes a down candle. The propulsion block is the next bullish order block immediately after bullish order block. Now let me explain the logic behind why propulsion blocks are the way they are. Okay, the reason why is because, remember, why are we returning back down into a bullish order block? Because that is an area of fair valuation for institutions to reaccumulate old orders. So the algo is driving the market back down to that level to pick up more orders. Okay, I want you guys to listen to me closer so you fully grasp the concept of propulsion blocks. The algo is driving the market to a level of old institutional accumulation to pick up more orders. Now the algo is going to quickly leave the level. It has to quickly leave the level because it's picked up the orders it wanted to pick up. There's no reason for it to hang around that level. The initial accumulation was done here. This drive lower was to go and pick up more orders at that old block of institutional accumulation. It's done that. What are you looking for? The algo has to quickly profit release. Remember the concept of that open, high, low, close, where you have the open and then below the opening price just accumulation, institutional accumulation, and then once you get above the opening price, you have your profit release phase where you create inefficiencies and the algo starts to deliver market quickly. That is the same concept with propulsion blocks. Okay, all the algo is doing is now that it's done the accumulation, it has to quickly deliver to a level of liquidity. So whenever I see propulsion blocks and I'm on the move, that's what I like to see. because I know the algo is going to want to quickly price into a level of liquidity. Why? Who's buying here? Let me ask you a question. Who is buying down here? Smart money. Where we turn back down into the order block. What's going on there? It's the accumulation distribution. It's not BlackRock. BlackRock, they're the small guys. Okay? Reaccumulation. If the institutions are reaccumulating, how can they exit their buy positions? Where do they need to exit their buy positions? Exactly. Buy stops. So what do you think the algo is going to do? It has to quickly drive to a level of liquidity because it's picked up all the others. The propulsion block is simply the market turning back down into an old order block to pick up more orders. Now it's picked up all the others. Do you know why I'm clicking my hands like this? So whenever you see that, it comes to your mind. Boom candle, orders picked up. It has to deliver to a level of liquidity. That's how you get propulsion blocks. Does it make sense? So let me see if there's any questions, because I'm recording this part of the presentation so you guys can watch it later on. So if you have any questions regarding just only propulsion blocks, ask me, because this is going to be recorded as a separate presentation on propulsion blocks. So if you have any questions about propulsion blocks, you can ask me, so I'll answer your questions. Awesome. So if there's no questions, I'm going to probably close out the session. I just want to see if there's any questions. And then after we've delivered to that level of sell side liquidity, guess what? It's done its job. Look at this. What was the target I gave you guys in dollar today for our session? For New York session. Primi of this inefficiency. That was the target. Okay? What do you think is going on there? So I want to show you in real time. What do you think is going on there? Propulsion block. Where is it delivering to? Sell side liquidity. What is this? What did I teach you about inefficiencies? Let me ask you a question. What did I teach you about this? This is the BISI. This is a BISI and also what? What is this? This is a BISI and something else. Exactly. That is a sell side liquidity pool. Does it make sense now? So why do you think you're seeing that displacement higher? We are distributing there. Look at the balls of the candle. We are distributing at a sell side liquidity pool. That's the outcome of all of this. Now it doesn't make sense. I would use a propulsion block to enter. Once it forms, once you see this up candle there, as soon as this candle trades through the opening price, that's your cue to go short. Or if it closes below the opening price, the next candle you're shorting that. You're not waiting for none of that. You short immediately the next candle. But ideally, so you can use propulsion blocks two ways. If you're on a trade and you identify a propulsion block, that is a very strong confirmation of your trade. Just like SMT, that's a strong confirmation of your trade. If you're on the trade and you identify MJ rebalances, that also, I think there was a live session where I did that live, and I was showing you guys live how to anticipate situations like that. Okay, so either you're entering the moment the candle closes below the bearish propulsion block, or you should have been on the trade already. So if you're up here and you identify a propulsion block and this candle closes like this, your stops go to even above your bearish order block, because now this should be the primary that market should take into consideration, not your order block. Now with this example, do you think this is still valid? Do you think this propulsion block is still valid for short? After I show you down to that sell side liquidity, do you think it is still valid for a sell, for consummation lower? Is that a trade you will take? Exactly. So the answer here is 50-50, meaning we can trade back up here, still come back down to liquidity, or we can trade through. But it is low probability. Why? Because the low resistance liquidity round, which is this low and this strong liquidity, has been met. Now we're in neutral. When we're in neutral, we move to the sidelines and we do nothing. Easy. So what would I enter in the scenario? I would have entered already. Okay, I'm not entering now because we already made a target. So either, again, like I said before, either I'm entering the moment the market closed below the open price, or as soon as the market trades below the open price, I'm shorting that, and I'm watching how the candle closes. And what I'm looking for is I want to see the candle close below the open price for validity. Does that make sense? All right, awesome. If you have a question, you can ask me. I'm going to end the recording because this is supposed to be recording on only